All right, welcome everyone to today's quarterly GR webinar. Please note that the Zoom webinar is being recorded. My name is Erin Mosier. I'm the Director of Education and Events here at NAEA, and I will be your technology moderator. So if you have any questions about technology or NAEA in general, you can always put that in the webinar chat and I will be able to answer them. If you have questions on the content of the presentation today, please use the Q&A feature found in your Zoom client. Now we have enabled upvoting. So what that means is there's a little thumbs up sign when a question gets put in. If you hit that thumbs up, it'll bump it to the top. And Michelle will be monitoring those questions throughout. So you can always ask it. We're not waiting till the end. We will ask them as time allows and as is appropriate. Now, please remember in the chat, everyone can see the chat. So please be respectful to your fellow learners and use that chat to share information and ideas regarding the presentation material. If you require closed captioning, you can click the Show Captions button on the bottom of your Zoom platform and then click Hit Subtitles. Now, before we begin, I'd just like to kick us over to Michelle McCaughey, who is the NAEA Director of Government Relations, who will kick us off. Michelle, floor is yours.
Thank you. Hello, everyone. Good afternoon. Welcome to our Fall 2023 Government Relations Update. Glad you can be with us today. I see at this point there are 70 participants who've logged in, so that's very exciting. As Erin said, I will be monitoring the Q&A and raising these questions with that, interspersing them with this presentation as we go along. So to get started, I'm going to hand you over to our Legislative Counsel, Thad Inge with Van Scoyac. Thad, take it away.
Great. Thanks, Michelle, and thanks everyone for joining. It's been a few months since we've had one of these, so I'm glad there's a good turnout, and lots has obviously been happening on the Hill in recent months. That might be an understatement. So feel free, as Michelle said, to ask questions throughout. We'll save some time at the end for questions. But we want to make this as conversational as possible. So type in your questions and Michelle will interject where it makes sense. So a couple of things. We're going to be talking about Congress, what's been happening recently in Congress, and sort of what some of the things coming down the pike might be towards the end of the year. We're also going to give an IRS update. Just a lot of the things that have been coming out of the IRS with the Inflation Reduction Act funding, other changes they're making going into the next tax filing season. And then we'll hit on some updates around NAEA's policy priorities. So what's happening in the 118th Congress? Just to set the stage, I wanted to back up a little bit and look at sort of what happened, sort of what were some major pieces of legislation in 2022, 2023 that got us where we are today. Inflation Reduction Act, which passed in August of 2022, is obviously the big one. That had the $80 billion for the IRS. Also had lots of other tax provisions and other policies. And so Treasury, IRS, a number of other agencies have been busy implementing that law. And you've also had Congress busy with oversight. So we'll talk about some of the details around that today. In terms of tax legislation, at the end of last year, they passed the big omnibus funding bill. It did not have a major tax section, but it did have Secure 2.0, which was the retirement legislation with lots of incentive, changes to 401ks, but also incentives to try to get more businesses offering 401ks. We had a special webinar around that, I think in the spring, where we kind of went over the details of that. And then the debt ceiling agreement happened more recently. That was late May of 2023. We had the potential crisis coming up. President Biden and former House Speaker McCarthy were able to strike a deal and avoid hitting the debt ceiling. One of the repercussions from that is they agreed to take, I think it was about 21 billion of the 80 billion in IRS money and roll that back. It didn't happen immediately. They're doing that through the appropriations process over the next 2 years, assuming we get appropriations bills. But that kind of fended off the debt ceiling crisis that we had coming. We weren't thrilled that they dipped into the IRS money, but it still leaves $59 billion for those IRS improvements. So it kind of takes us up to the fall. At the end of September was when we were looking at a potential government shutdown. They were able to strike a deal at the last minute. People were pretty much predicting 95% chance we're to have a shutdown because McCarthy did not have the support for passing a CR in his caucus. He went ahead and struck the deal with the Democrats, passed a 6-week continuing resolution, which President Biden signed into law on September 30th. But the fallout of that, of course, was on October 3rd. The House of Representatives voted to remove Kevin McCarthy as Speaker. Was sort of an unprecedented time. We went almost a month without a Speaker. There were a lot of folks that tried to get that job. And then we ended up with Congressman Mike Johnson, a Republican from Louisiana, on October 25th, being named the new Speaker of the House. We'll get into more of that in the presentation. And then November 17th, which is right around the corner, it's of course Friday, is when the CR expires. So we're kind of going through this whole, the motions of having to figure out how we're going to fund the government again, which we'll also get into. At the end of this year, there are a number of tax extenders expiring that could be part of a potential package. I think that, the handicapping kind of changes by the day. I think it's probably unlikely at this point we get something before the end of December. But we will talk about sort of the dynamics around a potential tax deal. And then January 1st, the 1099K reporting threshold goes into effect. That's one of the priorities of NAEA, is getting some adjustments there. So we'll talk more about that. So what happened this fall? What was the fall agenda? And I think the simple way to say it is it's been a lot of chaos. We had the turmoil with the Speaker of the House, which dominated most of October. The appropriations process is still in shambles. Republicans have been trying to pass individual funding bills, but have not been successful at that. And so we're looking at a potential shutdown for the second time, hopefully, and it looks like they're probably going to get another extension to kind of kick the can down the road. The Israel and Ukraine funding issues have obviously been front and center. IRS funding came into that picture as well as one of the potential pay-fors. And then the year-end tax package that we mentioned, the questioning, will there be an opportunity to pass some tax provisions? So Representative Mike Johnson elected Speaker. This kind of, most people, I imagine, on this call, unless maybe you're from, his part of Louisiana, never heard of Mike Johnson before last month. And I think that holds true even in Washington. I saw Charlie Cook speak yesterday. He's one of these prognosticators who kind of looks who's going to win the presidency, who's going to win the Senate, who's going to win the House. And he's from Shreveport, Louisiana. And he said, I went to the same high school as Mike Johnson. And he said, Mike Johnson's parents were in my graduating class of high school, both of them. And then he said, and I've never met Mike Johnson, which got a good laugh because he's sort of a fixture of DC. But it was going to take a low-profile candidate to win because Republicans were having a lot of trouble coming around a candidate that could get you could only lose 4 votes and receive the speakership. And so whether it was Jim Jordan, whether it was Steve Scalise, all the various candidates that came forward, it was just a difficult row. And so they ended up with a lower profile, less experienced speaker, but someone that did not have a lot of enemies and is known as being very conservative, but kind of has a mild demeanor. Mike Johnson's from Louisiana. He's been in Congress since 2016. He's served on a number of committees, hasn't been particularly active in the tax space, and he's mainly known for socially and economically conservative views. And so he kind of got thrown into a lot of sticky situations right off. And the dynamics of the House of Representatives right now are to get anything passed, it's very difficult. And so, we find ourselves in a situation this week where funding runs out on Friday. Republicans have said they don't like the clean CRs, which is basically extending last year's funding. They either want to have cuts or pass individual bills. They have not been able to do that. And so just this weekend, Mike Johnson put forward a proposal that would have two, they're calling it a laddered approach. And so it would have 2 dates. There's about 4 of the 12 appropriations bills that would go through January 19th. And then the others would go through February 2nd. The financial services and general government bill, which is what IRS is under, it's what Treasury is under, it's in the February 2nd bucket. And they're trying to pass that today in the House of Representatives. It will then go to the Senate. Assuming they're able to get this passed, it'll kick the can down the road to those dates. Everything will stay funded at the same levels as we're currently under. So we'll see. It's gotten some pushback. It does not include the Israel funding. It does not include Ukraine funding, which has upset some folks. But I think this is probably the best bet of getting something through and avoiding a shutdown, which would be not fun for anyone. And when you think about the IRS, if we were to shut down, and we kind of ran through this drill in September, like what would it look like? And of course, there's the annual appropriations that IRS gets, but then there's also the Inflation Reduction Act money, which is what you would call like no year money, or they actually have like 9 years to spend that money. And so that's not impacted by the shutdown. And so initially, the president of the Treasury's Union came out and said that it was her understanding the IRS would not shut down and would use the funding from the Inflation Reduction Act to continue operations. But we were, NAEA was in a meeting around that time, and we're basically told, don't believe everything you read in the papers. That's not necessarily true. And so while we were sort of excited that maybe IRS would be spared a potential government shutdown, we took the advice of folks in the room to not count on that. And sure enough, I think it was the day before, that Friday before a potential shutdown, the IRS put out what they call their contingency plan, which said they would partially close. The plan had, and it's still the plan of, for any future shutdown, although it changes a little bit in tax season. But basically up until December 31st, if there's a shutdown, 33.4% of the IRS workforce would keep working. But the rest, the other 65, 66% would be furloughed, would not be working. Things that would stop, and you guys probably remember this from prior shutdowns, but there would be no phones answered, so no PPS, and no customer service across the agency. Taxpayer assistance centers would be closed. Most refunds would stop. I think unless it was an electronic refund that had no sort of complexity at all, refunds would all stop. And the IRS would also not respond to any paper correspondence. Things that would continue would be prep for the tax season, updating forms in IT, which they're using some of those IRA funds for, and some of the modernization efforts. And, I said that was the plan up until December 31st. After December 31st, which would be considered tax season, they would have more staff that would be exempt and would be allowed to work during a shutdown. I think it goes up to something like 66% of staff would be allowed to work. Hopefully, we will not have to confront this. Hopefully, the agency will get funded. But I think as we kick the can down the road at every, there's going to be a thread of this sort of at every turn, until they get a year-long annual appropriations bill. Michelle, before I keep forging ahead, are there any comments or questions that we should address?
No questions yet.
Okay. So, speaking of potential shutdowns in the budget, what they're working on right now and have been for this year is the FY24 budget for the IRS. And that's separate than the 80 billion or now 59 billion that the IRS is getting through the Inflation Reduction Act. And one of the things that Commissioner Werfel has said, and I know NAEA has said, for years, is the annual appropriations needs to remain solid for the IRS because this is what keeps the agency running. And in order to keep it properly staffed, have proper customer service, have strong information technology and digital tools, you really need that annual appropriations. They're in a good position now because they've got this Inflation Reduction Act money, the 59 billion. But what they don't want to do is be in a situation where they're constantly underfunded annually and having to dip into that money, which is more supposed to be for the big infrastructure projects, the big digital upgrades and hiring. And so we have encouraged Congress to adequately fund the IRS. If you look at the budgets for FY24, the House Financial Services and General Government Appropriations Bill, which includes IRS, had a $1.1 billion cut. And so it is down. And then it would also, as I mentioned, rescind the 10.2 billion in IRS funds previously appropriated under the Inflation Reduction Act. That's part of the debt ceiling deal. So that's the money going from the 80 billion to the 59 billion. They would do 10.2 billion this year and 10.2 billion next year. So the House, it's a Republican House. They have not been super favorable towards the IRS, as we all know. And so it has some real cuts. This bill was on the floor of the House of Representatives last week, and they actually pulled it because they did not have the votes to pass it on Thursday, and or maybe it was Wednesday night. And this is not because of the IRS funding. There's obviously lots of other stuff in this bill too, which is the main reason they were not able to pass it. And so it's a little unclear kind of what the next steps will be in the House in terms of trying to move this bill forward. The Senate bill, which is a similar bill that was drawn up in the Senate, has 12.3 billion for the IRS. So it's the same amount as fiscal year 2023. Obviously, with inflation and stuff, we would have preferred it to go up a little bit. But they at least kept it steady and did not cut it at all. And so, even if the House had passed their bill, it would be a negotiation with the Senate in terms of getting a final package. So it probably would have been somewhere between those two numbers. But now that the House has not been able to pass that bill, we'll have to see how the ultimate number shakes out. But sort of big picture, we want to make sure that the government stays open and IRS is not shut down, and also that they're funded at least, maintain the level where they're at, so we don't see more cuts. So one of the things that we have been kind of tracking all year, talking to the Hill about all year, because there's always impacts included for you guys and for EAs and tax professionals across the board, is a potential tax package. The end of last year, there was a lot of talk leading up. Will there be a tax package? Will there be a tax package? Other than the retirement provisions, the Secure 2.0, They ended up not having one. That sort of redoubled the pressure to have something this year, because there are things that are, expiring or in need of being addressed. And so we'll talk through a few of those key issues. For the business community, these are the big three that get talked about the most, that they call them the business extenders, that a lot of businesses, both large and small, are very focused on trying to address. R&D tax credit, you guys have all probably, come across this with potentially some of your clients, especially if you work with businesses. So when they passed the Tax Cut and Jobs Act in 2017, that's the Trump tax bill, one of the pay-fors that was in that bill was to say, starting this year, instead of allowing folks to expense R&D over 1 year, to take that credit over 1 year, that it would be spread out over 5 years. So if you had $1 million in R&D, it used to be you could write that off in the same year. And under the bill, starting last year, actually, it was for tax year 2022, you had to amortize that over 5 years. Now that it's actually going into effect, got a lot of, initially we heard mainly from large businesses, large corporations that are doing lots of R&D. We're very upset. We're going to Congress saying this is going to really hurt what we can invest in our innovation, our R&D. We're trying to compete with China, and this is not the right time to, de-incentivize this R&D investment. But I would say this year, the focus has really also spread to small businesses, because there are a lot of small businesses that do different types of R&D that really depend on that tax break to be able to, stay in business, pay all their bills. And a lot of them are super concerned, running up to the Hill saying, I'm going to have to lay people off if we're not able to fix this soon. And so I think in terms of thinking about, will a tax bill get done in the next couple of months, the R&D tax credit issue is the major driver, because it's the one that's really impacting businesses, pocketbooks, where it hurts, and they're being very vocal with the Hill. Full bonus depreciation is another one. The 100% bonus depreciation will phase out after the 2022 tax year. So this year, with qualifying property getting only an 80% bonus deduction in 2023 and less in later years. And so folks are trying to push that back to 100%. And then interest expensing, a similar situation. In 2022, changes to interest expensing went into effect that tightened the interest deduction substantially. Adjusted income is reduced by depreciation and amortization. So those are kind of the three big business community credits. And I would say that there's really support on the Republican side and the Democratic side for fixing these. But there are a few questions. One is how you pay for it. And the next one is what happens with the child tax credit. So there are a number of Democrats that they like the R&D, they like the business extenders, but they say, if we're going to do all this for business, what are we doing for families? What are we doing for children? And so Democrats have made it clear that in order for them to vote yes on a tax package with the business extensions, they would like an enhanced child tax credit to be included as well. And so that's expensive. Just like the business provisions are expensive, the child tax credit the enhanced credit that they had during COVID was extremely expensive. And I'm sure you guys remember that. I mean, families were getting a lot of money from that enhanced credit. Then it went back to sort of the old credit level. if there is a compromise, it would probably not be what happened during COVID because that's just too expensive. But they would try to strike some deal where they spend about the same amount of money on the child tax credit as they do on the business extenders. But that's kind of the sticking point because there are a lot of Republicans that say we're not going to spend all that money on the child tax credit with inflation being high and government spending increasing. We don't think that makes sense. But Democrats know how badly the business community wants these business extenders, and so that's the negotiation chip. And it'll be interesting to see if they can come to some kind of agreement. It'll also be interesting how do they pay for it because these things probably will need to be paid for somehow in order to pass. And a few other there are lots of other tax provisions that are kind of in the mix. But those are the major ones that really the deal has to be struck around those in order for there to be a package. But a couple other I wanted to mention, and we'll talk more about this later with the NAEA priorities. But the 1099K, as most folks remember, last year it was going to go into effect, and they ended up punting it for a year. But it is the American Rescue Plan that lowered the threshold from $20,000 to $600 that apps like Uber, Venmo, others where online payments are occurring, that there would need to be a 1099K sent to the recipient. This has concerned a lot of folks because $600 captures a lot of people that are maybe just doing a garage sale or selling a piece of furniture, and there's real concern among tax professionals and a lot of folks that this will create a lot of confusion, that $600 is too low in terms of sending a 1099 to all these 1099K to all these folks. And so that's one where there really is bipartisan support. Like, we probably don't want this to go into effect. The question is, where do you set the level, and is there a vehicle to get something done? There's a bill that NAEA supported in the Senate that sets it at $10,000. I don't think we're married to the $10,000, but we basically commended the senators for taking a stance and for offering a solution that could work for everyone. So initially Republicans were pushing for something closer to 20. Democrats were saying 5,000. But then they both sort of started to soften, and there is this bipartisan bill saying let's set it at 10,000. So we'll see what happens with that. And then the SALT cap, this state and local tax deduction, of course. There has been a big push. Everyone from California, Illinois, and New York on the call are obviously super aware of this, but raising the cap has been a major priority, especially for the New York delegation. But New Jersey, any of these high tax states, there's been a big push on both sides of the aisle to raise that cap. There's a bill that would raise it to $60,000 for single filers and $120,000 for joint filers. Next slide, you'll see that this came up in the speaker's race. I told you that they could only lose 4 Republicans. A speaker nominee could only lose 4 Republicans and still become a speaker. Well, this became an issue because you had a lot of the Republicans from the New York City suburbs, moderate districts. SALT is a major issue for them. They, with a few of the speaker candidates, said, we're not going to vote for you unless you agree to do something around SALT. Speaker Johnson did indicate that he's committed to keep the SALT deduction cap in mind for a year-end tax package. He didn't, overpromise anything, I don't think, but I imagine folks will try to hold him to that. This is a sticky issue because a lot of the rural states, middle of the country states, aren't necessarily in favor of getting rid of this. And then it also costs a lot of money. This was a major revenue raiser for the 2017 Tax Cut and Jobs Act. And so how do you pay for this stuff, you know? There were obviously lots of tax cuts in 2017, and they used some of these things like the R&D and state and local tax deduction cap to pay for it. Those pay-fors are unpopular, but the money has to come from somewhere. So it'll be interesting to see how that shakes out. My predictions, so, you know, if the CR passes this week, and we've got a January and February date for the next extension, I think it kind of takes off the table. It probably takes off the table having a large package before the end of the year. And so this tax discussion likely goes into next year. As you guys are probably aware, Congress loves to pass tax extender bills late and then do things retroactively. And so you could see them maybe for some of these things retroactively going back to January 1, if they were able to pass something next year. But the later we get, I mean, we're almost to Thanksgiving. I think the less likely it is that Congress is able to pass a tax package before the end of the year, which I think in some ways that might be good news for you guys because you don't have last minute changes. But also, I know some of these provisions you'd like to see happen. All right. Before I start with the IRS, any questions about, you know, I tried to hit on the sort of the high level of Congress and then some of the things that are happening in the tax space. It's been a lot of chaos this fall and dysfunction, but we're continuing to, you know, to work with offices and push our priorities. But any comments or questions, Michelle, around the congressional stuff?
Nope, not yet.
All right, and folks, we will do Q&A at the end. So if you have questions come up, feel free to ask. So we talked about the Inflation Reduction Act passing, and one of the things that Secretary Yellen said after that passed was she asked IRS to come up with a strategic operating plan for how they were going to spend the $80 billion. Danny Werfel was not in at that point, although he did get in a few months before, I think maybe just 1 month before they released the strategic operating plan in April 2023. And it outlined the plan's much longer than this, but sort of high level, it outlined 5 objectives for the Inflation Reduction Act money to dramatically improve services to help taxpayers meet their obligations and receive the tax incentives for which they are eligible, to quickly resolve taxpayer issues when they arise, to focus expanded enforcement on taxpayers with complex tax filings and high dollar non-compliance to address the tax gap, deliver cutting-edge technology, data, and analytics to operate more effectively, and attract, retain, and empower a highly skilled, diverse workforce. I think those are, you know, all 5 of those are things most people probably agree with, and also agree that the IRS has been deficient in recent years in all of these. And so, you know, their goal is to use the $80 billion in IRA money to try to address these, to try to make improvements in these. I think the verdict is still probably out. There has been a lot of activity. I think most people feel like Werfel's doing a good job, but these are not, you know, easy problems to overcome. As I said, one of the negative things kind of coming out of the gate was when they struck the debt ceiling deal and that $80 billion became $59 billion. $80 billion was always a lot of money, but the IRS had a lot of problems. And so the 59 billion is sort of the shrinking amount. I think I think 59 billion will probably be sufficient, but I think the question will be, are they able to not have future reductions to this amount of money? I mentioned the Israel bill. There was an Israel aid bill last week or 2 weeks ago that Republicans had being paid for entirely by taking about 12.5 billion from the IRS. That didn't go anywhere. The president and the Senate had said, that wasn't an option for them. But we'll see kind of going forward as these negotiations happen if the IRS is able to maintain that full $59 billion balance. So Werfel came in last spring and they had this strategic operating plan, and they said, we're going to get to work on a number of fronts, modernizing and improving the IRS. The next few that I'm going to mention are kind of largely related to that in terms of some of the initiatives they've rolled out. I think on all of these, I would say, the intent looks really good. The details look pretty good. I know we're getting feedback from EAs. How is it actually working on the ground? Is this the kind of changes that you wanted to see? Is this stuff effective? Because we know that, getting feedback from groups like NAEA, from tax professionals, from EAs, them folks that actually use these systems, is going to be the key to the IRS being successful. And so just keep that in mind. We're not, while we are applauding the IRS and encouraging them and all of this stuff, we're also not drinking the Kool-Aid. We know that this is going to be hard and that we have to kind of stay on top of them and give them constant feedback to make sure they are spending this money wisely and making things more effective for tax professionals. So the paperless processing initiative was one that was announced in August. It had a number of components, so I won't try to name them all. But one of the things is making it easier for tax professionals and taxpayers to correspond electronically with the IRS. So being able to upload responses to notices, not have to mail things back. There's also a big piece around scanning any paper forms that they get. They're to immediately scan. And one of the things they say that will improve is customer service when you're on the phone with the IRS and you're trying to get something pulled up. Another piece that they're saying will be done by this tax filing season is being able to file more forms electronically. The 941X is one of the forms they're talking about. Of course, a lot of folks for the quarterly employment tax return had to use that to file for an ERTC. And that was only on paper, which is one of the reasons, the paper backlogs were so out of control. And so trying to get more stuff online, more stuff digital. And so I know that if you have feedback on kind of how those changes are working for your practices, I know NAEA would love to hear it. Another piece is the Tax Pro account update. This is another one that's brand new. They've been making some improvements to the Tax Pro account. I know that from some of our committees, we've been seeking feedback, but if folks have a strong opinion about how this is working, I know we'd love to hear about it. But it'll allow tax professionals to view client information and manage their active client authorizations on file with the CAF database. Tax professionals can also send power of attorney and tax information authorization requests directly to taxpayers' accounts. They'll be able to withdraw from their active authorizations online in real time. And overall, just improving digital tools and access for tax professionals of course has been a major priority. It's one in the past we've sort of felt like IRS might announce some big change, but then and sort of pat themselves on the back, but it doesn't always work well for tax professionals. we're hoping that's not the case here, and that these really are, moving the needle for EAs. But please give us your feedback. Secretary Yellen made a big speech last week. I think with the IRS constantly under attack, and with the new Israel bill saying they're going to pay for it, Republicans saying they wanted to pay for it with IRS money. The IRS and Treasury have been trying to make the case for what they have done, the improvements they have made, and kind of what they have coming in the future and why this is so important. And so Secretary Yellen made a big speech last week, and she touted some of the improvements in last year's tax filing season, talked about the paperless initiative and the tax pro account and other tools that they're sort of bringing online, and then said they have big plans for a smooth filing season in 2024. And I'll read this quote because I know that the phones, the end of 2021, phones were a major issue where folks could not get through, 2-hour waits or constant courtesy disconnects. And then things improved dramatically right before the tax filing season. But Secretary Yellen said, we will again commit to an 85% level of service during the filing season, meaning the vast majority of callers will be connected to live assisters and get support. We'll also commit to an average call wait time of 5 minutes or less, and nearly all callers will be able to take advantage of a callback option in the rare situations in which wait time is much longer. So they are focused on the phones, which is one of the things, we encourage them to be focused on. Obviously, we're all for the modernization stuff. We're all for the digital tools and the technology, but we also told them you got to be able to do the basics, and not allowing people to get through on the PPS line is number one. And so hopefully, as she's committing, that'll be a smooth experience.
Thad, we've got a couple of questions.
Okay, great.
Dana has clients still waiting for 20 return and 21 returns to be processed. Do you know when we can expect the backlog to be caught up for refund check processing and audit reconsiderations if no government shutdown?
Yeah, I don't have a good guess or date on that. I will say that that's just emblematic that how bad the paper backlogs really were. We've heard a lot of that, on the small business and employer side, where folks that filed for the ERTC, and of course there was fraud in that program and other problems, but where people sometimes have waited 2 years because of the backlog in 941Xs, which I think is about 980,000. And actually, we have a later slide on that. But in terms of just standard refunds and returns that have not been processed, that shows that the paper backlog is still real. And I think the IRS needs to keep hearing from us on those. If we have specific examples, we can share with them. But they've said that these digital tools, the scanning technology, all of this stuff is going to help them continue to dig out of that backlog. But yeah, that does not sound good. I wish I had a better answer of when that would happen.
We have another question too. Robert says that IRS said that maybe a year ago they were looking into alternatives to ID.me for tax pro accounts. He's not heard any noticed moves on that direction. Do we anticipate anything? Have we heard anything?
Yeah, I have not heard anything recently. I knew there were going to be two options. There was ID.me and there was another, I'm forgetting the name, but another option I thought. But I have not heard anything recently on that, but we can inquire about that.
Okay, well, that's it for the moment.
Okay. So I'm looking at the clock. We got about 15 minutes. So as part of the IRA funding and as part of sort of the administration's priorities and stuff, one of the things they talked about is increasing enforcement, but also having smarter enforcement and better targeted enforcement. So, there's been a big push on, we're not going to increase enforcement on folks making less than $400,000 a year. So basically, really focus on the more complex partnerships and high net worth individuals and that kind of thing. But there were also some studies that came out, and this highlights one of them from Stanford University, that found that minority taxpayers claiming the earned income tax credit were audited at a higher rate than non-Black taxpayers, and this was a big issue for Ron Wyden, who's the chairman of the Senate Finance Committee. He raised this at the confirmation hearing of Werfel and sort of said these racial disparities are not right and not fair. And so the IRS recently said that they were going to substantially cut its audits of refundable tax credits that benefit low-income taxpayers to combat this racial disparity in audits, and try to sort of make for a fairer system. When it comes to the high-income folks, whether it's high net worth individuals or major corporations, they have been very clear that this is one of the areas that they are ramping up enforcement. So they announced in September the start of an effort to restore fairness in tax compliance by shifting more attention onto high income earners, partnerships, large corporations, and promoters abusing the nation's tax laws. They're going to use artificial intelligence. They're also beefing up compliance teams. And we'll talk in a minute about the hiring, but they're trying to hire more sophisticated individuals to work on these teams. And basically, essentially do more audits and have more sophisticated staff working on those audits on the higher end. Which brings me to the ACS, the automatic collection systems, which, as most folks know, was really scaled back during COVID. A lot of the notices, a lot of the automatic enforcement stuff that happened kind of on a routine basis that keeps folks sort of across the board paying their taxes. Because of those backlogs, because IRS couldn't reply to the correspondence and things were so out of date. They, I think rightly at the time, said we're going to suspend some of these notices because we're missing, responses in the mail, or some people have already paid, but their check's sitting in the mail, and then they're getting all these, ACS notices. Well, there's a real feeling among tax professionals and a lot of other folks that this has gone on for too long, that there's really an inequity between what's happening if something gets referred to the field, to revenue agents, versus sort of the normal flow of things at ACS, with that being suspended. It's kind of luck of the draw for a lot of taxpayers. And so NAEA, and this was something that was really led out of the Government Relations Committee, wrote a letter early October, sort of making the case that it's time to return to normal operations, and have those notices going out again to remind folks they need to pay, to sort of create that rhythm of enforcement. We were not really expecting, or I was not really expecting, any change until after the beginning of the year, because that's what IRS most recently told us, is that they're not going to restart these things before the end of the year. Although we did hear, and I'd be interested if folks later want to provide feedback, we have heard that in the last couple of weeks there's been a real uptick in some ACS notices, particularly letters 501 and 503, and so we're hoping maybe the letter did spur some action at the IRS, because if taxpayers aren't reminded that they need to pay, sometimes those steps just don't happen. And so this is an issue that we're very engaged in, and hoping there can be some progress, just getting the IRS back to normal operations, normal flow of things. ERTC claims, I'll just touch on this briefly. as folks know, there was lots of fraud. There was lots of backlogs, people with legitimate claims not being able to get them approved because of the paper backlogs. In September, the IRS announced that they were doing an immediate moratorium on processing new claims through the first of the year. And so they are not processing new claims. I saw that the backlog, I actually checked this yesterday. It's now up to nearly 1 million 941Xs in the queue. It had been around 500,000 or 600,000. And so people are continuing to submit them, but they're not working them. And then they've related to this, the IRS has come out with a couple of announcements. One is a way for folks to withdraw their application if they realize that they did not actually qualify and they don't want to, pay any penalties or anything. And then they're also going to be coming out with more guidance on how to pay it back if you did receive it, but you realize you were not entitled to it. ERTCs were pretty easy to get because you just had to write a number on a 941X. But the IRS has said they're going to do extensive auditing, and so they're encouraging folks that did not think they were entitled to it to go ahead and take some action. The hiring initiative. So as part of these efforts to do, to really go after high income and complex tax areas like partnerships, the IRS is looking to hire tax professionals, accountants, folks with expertise. Their goal is to hire 3,700 positions nationwide. These are kind of on the high end. I think they said the average, salary for these jobs is like $125,000. And so they've been trying to work with groups like NAEA and other tax groups just to get the word out if someone is, interested in working for the IRS, that they're trying to hire these more specialized positions. So NAA priorities, these are kind of the major headlines. Some of the details have shifted throughout the year, but number one is definitely implementing the Inflation Reduction Act. And that's sort of working with both IRS and Treasury, but also with Congress as they work on the oversight of that and sort of helping set the priorities for what the agency should be focused on. And, from an NAEA perspective, things like overhauling the CAF system and making improvements there, making sure that PPS and communication in general is working really well, making sure there's balanced enforcement and prompt compliance operations, as we saw with the ACS, that folks aren't waiting years to get a notice, because that makes it harder for EAs to do their job. Expanding electronic filing, of course, hiring and training, making sure when we finally get in hold with someone at the IRS, that they're trained and can help answer EA's questions. And so this is kind of, a once in a lifetime opportunity with the Inflation Reduction Act money, and something that NAA is trying to really focus on pushing IRS and Congress to do the right thing with the money. The minimum standards for tax preparers. We had regulation of tax preparers, but we try to say minimum standards because it sells a little better. So I went in and changed this earlier today. But as folks will remember, this has been a long time priority, obviously, for NAEA. Jimmy Panetta, congressman from California, Democrat, and Congressman Rice, who unfortunately lost last year, but Republican for South Carolina, were the champions of this last Congress. We have been working on this sort of nonstop since then. Jimmy Panetta is taking the lead. We have been trying to line up a strong Republican co-sponsor. We've had a number of meetings and do have some folks in queue, but are trying to get that over the finish line so we can have a bill reintroduced that sort of helps achieve this goal of making sure it's not a race to the bottom, making sure there are some minimum standards, that folks know what they're doing, that are out there preparing taxes, and that there's a level playing field for EAs. that you're not, having to compete unfairly. And so this remains a priority. It is I will say, a tough environment right now in the Republican caucus. Just some of the politics around the IRS in terms of giving them more power. But I'll also say that a lot of the fraud that happened with ERTC and COVID makes the case that we do need qualified folks. And so I think that's a good argument that we've been able to use. And then the 1099K threshold, as we talked about earlier, American Rescue Plan, lowered that threshold to $600, and we think it could create a lot of chaos, a lot of confusion, if it's not sort of a more reasonable level, whether it's 5,000, 10,000, or something like that. And so, this is going to come down to, is there a tax package? And I think if there is, this will probably make it in there. But we're not sure if we're going to get one. We're probably not going to get one before January 1 when this goes into effect. And so we've also worked with IRS on having guidance and more clarity, so tax professionals do know how to sort of help people address these when they get them. With that, any other questions, Michelle?
Nope.
Any announcements? I know that, we're starting to work on the fly-in for next May, which will be in DC. We're excited about that. Last year, we added a day where we had a day of speakers, had some really great speakers. And then we did a day of Hill meetings. And so stay tuned. Probably after the first of the year, we'll start advertising more for that. But, I think we had close to 100 folks last year, and would love to have a good turnout this year. We got really good feedback. I think, people like being in DC, getting to interact with your congressmen and senators, and also just learning some of the issues from folks here. But with that, I don't know, Michelle or Aaron, if you guys have anything to add.
I just want to wish everybody a happy Thanksgiving coming up in a couple of weeks, and be safe. Enjoy your time with your families.
All right. Well, thank you all for your participation and your interest in NAEA's government relations work. The recording for this will be posted on NAEA's YouTube channel if you missed some or you want to send it to anyone you know. This concludes today's program. Thank you all. We look forward to seeing you at the next one. Happy Thanksgiving.